I'm Stan Barnes, and I'm here with Eddie Hatch, and we're Barnes Capital Group. Hi, I'm Stan Barnes.
And I'm Eddie Hatch.
Welcome to our second edition of Barnes Quarterly, our second podcast. And today we're very excited to hopefully bring you some information that you'll find useful. Just wanted to give you a little bit of a recap of last year, both within our firm and within the markets. And we have a special guest, Michael Kalifeh, CPA and partner with the local CPA firm, Howell, Ferguson. So hopefully you'll find this information useful. Happy New Year to everybody. We hope your year is off to a great start and you and your families are able to enjoy the holidays. But looking back on 2018 at some of the individual accomplishments outside of our office, one of our advisors here at BCG, Tom Dyson, recently successfully completed an Ironman Florida competition in Haynesville. For those of you that don't know, an Ironman involves a 26-mile run, biking 112 miles, and swimming 2.4 miles, which is quite an accomplishment to get all that done. And Eddie Hatch, another one of our advisors and my co-host, celebrated 10 years with the firm in 2018. Anybody that knows Eddie knows he's an avid outdoorsman, and he was honored last year by being tapped for the State Board of Trustees of the National Wild Turkey Federation. Eddie, tell us a little bit about NWTF.
Sure. I've been volunteering with NWTF for almost, I think it's a little over 2 years now, and recently was elected to the state board. The NWTF, it's a nonprofit organization that has really two main focuses. The first is restoration and preservation of land and wildlife habitat, and the second is trying to get new people exposed and interested in the outdoors. A lot of our programs are geared towards children, women, and people with disabilities. It's been a great experience for me. I've really enjoyed it. I really enjoy the opportunity to help people experience the outdoors in new ways.
Well, that's great. I know you'll do a great job on their board. Back in June, I was honored to collaborate with the Big Bend Society of Human Resource Managers and presented a workshop on fiduciary standards, primarily designed for employers who are retirement plan sponsors. The presentation was designed to help outline fiduciary best practices and was designed by FI360. We're also proud to support some of the nonprofits and organizations in our area like Big Bend Hospice, Tall Timbers, and the Florida Society of Association Executives. We've been busy at Barnes Capital Group and are excited to report that in early November, we completed our transition to our new OSJ, or Office of Supervisory Jurisdiction, within LPL, our broker-dealer. And OSJ supervises and provides consulting and business services to independent advisors such as Barnes Capital Group. The group that we chose is based in Charlotte, North Carolina, and operates under the name Independent Advisor Alliance, or IAA. One of the major pickups in this move to IAA is that we have access to the talents of Chris Zaccarelli in the area of portfolio strategy. Chris was formerly an equity trader at Goldman Sachs and brings 20 years of experience in the investment industry. You'll be hearing more about Chris in the near future, but he's frequently asked to offer his opinion on markets as a guest on CNBC. Well, 2018 was a pretty challenging year in the financial markets, particularly when you compare it to the prior year. We saw a significant increase in stock market volatility that was possibly fueled by unfinished trade negotiations with China, midterm elections, the Federal Reserve's plans of increasing interest rates, and indication of slowing economies globally. Despite the factors just mentioned weighing in on the markets, economic fundamentals in the U.S., as measured by strong corporate earnings, growth in domestic product, GDP, low unemployment, and relatively low inflation and interest rates, presented a more optimistic outlook. Despite the government shutdown and trade negotiations with China, going into 2019, we've seen the markets a little calmer as corporate earnings reports have been rolling out. The consensus seems to be that while a recession is not imminent, economic momentum is slowing on a global basis. The U.S. economy still appears to be growing at about a 2% pace, which should be strong enough for the bull market to continue. While it's hard to project the direction capital markets are going to take, our guest today deals in a world that's a little more certain, and that's in the area of tax planning, which has been changing a lot lately. So at this point, I'd like to introduce Michael Kalifeh, who's sitting in with us today, one of the partners of Tallahassee-based CPA firm Howell Ferguson. And since we're a little past the end of 2018 and starting up in 2019, and April 15th is just around the corner, we asked Michael to join us and maybe give us some tips on tax planning as we approach our tax filing date and plan for the new year. So welcome, Michael.
Thank you, Stan.
So, Michael, most of our listeners, I'm sure, are probably familiar with Howell Ferguson here in Tallahassee, but tell us a little bit about the firm and sort of what your role is within the firm.
Sure. So Howell Ferguson is a full-service CPA firm providing tax services as well as assurance services. My particular role at the firm is I serve as the director of the tax services department, which I oversee approximately 25 employees providing tax services both on the compliance basis and consulting basis to a variety of clients and a variety of businesses, ranging from not-for-profit associations to for-profit entrepreneur-based businesses down to individual tax needs of those owners of such businesses or just individuals themselves. So our firm was founded in 1993. When I joined the firm in 2003, it was approximately 35, 40 people, and now we're in 2019 at 80 strong with 2 locations, one in Tallahassee and one in Tampa.
So, Michael, as far as planning for the new tax code and some of the new challenges and opportunities that brings, we've got a pretty broad customer base. Some are individual privately held businesses, others are individuals who might be paying their taxes, and then we have young professionals. Those would kind of be the 3 different groups that we typically advise. What are some things they can do going into filing for their taxes for 2018?
So for taxes for 2018, for the most part, once the year closes, you're in what we call compliance mode, where it's a matter of completing the tax return based upon the information that took place in the prior year. So in this case, January through December 2018. One of the recommendations I've been making recently is where, because of lower overall income tax rates, which was part of the Tax Reform Act in 2017, most individual taxpayers are going to realize a lower tax rate, effective tax rate. Should mean they pay lower taxes overall. So when their tax rates have dropped, the recommendation I've been making is to reconsider, if they haven't been doing this already, is Roth vehicles to save for retirement. That would include Roth IRAs and Roth 401k deferrals if their qualified plans allowed for that. So they're not getting the upfront current tax benefit that they get with the traditional pre-tax savings vehicles. But when you look at the long term as to what a tax-free compounded rate of return environment looks like, it can dramatically exceed what it would look like if they were to utilize pre-tax traditional vehicles. It's particularly relevant for younger professionals because they have a longer time horizon for an investment to play out. So I've been going back to that with many of those.
And just a reminder that for those, if somebody's funding an IRA, they have up until they file their taxes, which would, assuming they file on April 15th, they can fund those IRAs up until April 15th.
Right. So just a little bit of a different spin on that. The individual has up until April 15th to fund the IRA for the prior tax year. If they extend their tax return past April 15th, they do not get additional time to fund the Roth or traditional IRA. That deadline is April 15th for the immediate preceding tax year.
Perfect. And on the business side, the businesses do have up until, if they extend out until October, they can still fund their profit sharing potentially out through that date.
That's correct. The businesses, whether that's a 401k, a simple IRA, a SEP account, all those are tied to employers or businesses. If they extend the associated returns with those businesses, or an individual returns, the case may be, depending upon the plan, they get up until the extended due date
Okay.
to fund those accounts for the prior year.
But isn't it right? They probably would have had to adopt those plans prior to year end in order to fund them in the coming year. Or are there opportunities after the end of the year too?
In some cases, yes, they have to have been adopted by December 31st. In some cases, not. One common example of that is that works really well for self-employed clients or taxpayers. It's called a SEP account. And a SEP can be adopted after the end of the year and actually can be funded up until October 15th for a calendar year business, assuming they extend their personal income tax returns. So it provides a window of roughly 9.5 months to fund and impact the prior year's tax obligation.
Okay. Well, I know you've taken some time speaking to various groups. I got to sit in on one of them about the new tax laws that came into place last year. And on a go-forward basis, what are some planning opportunities that you might see?
Probably the most significant item in the Tax Reform Act that I spend my time on with clients or those that are just interested and may have an avenue to take advantage under the new Tax Reform Act is what's called, the actual code section is called Section 199A, but in layman's terms, it's called the pass-through deduction. And for businesses that are structured as a pass-through entity, which means they are either an S corporation, a partnership, or a disregarded entity sole proprietorship, they can have a deduction on the net taxable income of their individual business of up to 20% of that taxable income. So in effect, they would pay tax on 80% of the income they earn. The deduction's calculated and determined at the individual tax return level, but the data inputs are considered and planned around at the entity level, the S corporation, the partnership, or the disregarded entity.
Okay. Well, that's great. And what about on maybe on the individual level, as far as opportunities that those folks might be able to take advantage of under the new tax laws?
So one item that I think we heard through the whole debate of tax reform was the concept of tax simplification. So if anyone's seen the new individual tax returns yet, the old Form 1040 was 2 full pages. The new 1040 truly looks like a postcard. It's 1 page. However, there are multiple supporting schedules that feed into that 1 page. That's more the logistics. Probably from a tax planning perspective, the standard deduction was dramatically increased in the new tax law. And unfortunately, personal exemptions were removed. So you kind of got a give and a take there. Overall, tax rates were reduced for 5 of the 7 income tax brackets. So overall, I think the statistic that I saw was 95% of individual taxpayers should see tax relief in terms of a lower overall total tax liability. But it doesn't mean that they're in the end of the day when they file their tax return that they'll get a greater refund. So it's really important that as they're going through and filing their 2018 tax returns, that as they're looking towards 2019, they make sure they have their withholdings and their estimated tax payment structures appropriately set to take into account the new tax law impacts.
By considering these tax tips and establishing the most advantageous strategies for your situation, you may be able to optimize your opportunities and minimize your liability. You may want to consult one of our qualified tax professionals or more information according to your unique circumstances.
Or you may be working with somebody currently that you can tap into. One question that I get asked quite a bit from clients is, if I want to learn about investing, what's a good book for me to read? So we're constantly looking for what the best resource might be for that. But if you do want to learn more about investing, one of the books that I recently picked up is a copy of The Investment Answer by Daniel Goldie and Gordon Murray. It's a pretty easy read, and it's only about 70 pages long and offers some good basic information on investing. One area that I disagree on, and that is that they heavily favor passive or index asset allocation. And while that may be appropriate in many situations, it's not the only viable option. There are some actively managed strategies that are time proven. So thanks for listening today. We hope that you'll join us next time, where we will dive into the topic of retirement plan solutions for business owners, such as simple IRAs and Safe Harbor 401k. If you enjoyed what you heard today, please subscribe to our podcast, Barnes Quarterly.
Michael Kalifeh and Thomas Howell Ferguson are not affiliated with Barnes Capital Group, Independent Advisor Alliance, or LPL Financial. All performance referencing is historical and no guarantee of future results. The opinions voiced in this show are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Independent Advisor Alliance, a registered investment advisor. IAA and Barnes Capital Group are separate entities from LPL Financial.